Hey everyone, welcome back to the channel. So, picture this. You're sitting with your family, maybe you have some property passed down, or you're starting a business together, and someone mentions, hey, why don't we form an HUF? Sounds confusing, right? Like some old family thing only chartered accountants know about? Well, let's break it down. What is an HUF anyway? Okay, think of an HUF that stands for Hindu Undivided Family as its own separate entity. Yes, separate, just like a person or a company in the eyes of the income tax rules. It's not just for Hindus, by the way. Families following Jain, Sikh, and Buddhist laws can also form one. Why would you do this? Well, it's a way for a family to collectively own property and earn income. And doing that, guess what? It can potentially help you optimize your tax bills. To start one, you need at least two people related by blood or marriage working together as a family. Simple enough, right? Members versus coparceners. The family roles. Now, inside this HUF family structure, not everyone has the same role or rights. There are two main groups, members and coparceners. Here's the key difference. All coparceners are members, but not all members are coparceners. So, who's a member? This is the broader group. It includes anyone who is part of the family by lineal descent from a common ancestor. That's basically everyone down the family tree, including the wives and unmarried daughters from all generations. It also includes wives of the male coparceners through marriage. And even an adopted child becomes a member. What do members get? Their main right is to get maintenance from the HUF's property. This means the HUF helps provide for their basic needs like food, shelter, clothing, education, and medical care. Here's a quick point. Generally, members cannot ask for the HUF property to be divided up, also known as partition. Their claim on the property usually happens through the coparceners. Now, let's talk about coparceners. These are the people in the HUF who have a birthright in the main joint family property. Yes, this right comes simply by being born into the family. Traditionally, only male descendants up to 4 generations were coparceners. But, and this is a big change, after the 2005 amendment to the Hindu Succession Act, daughters are now coparceners by birth too. They have the same rights and duties as sons when it comes to ancestral property. Okay, what kind of rights do coparceners have? They have the right to demand partition, male or female. They can ask for the property to be divided. They have joint ownership and possession of the coparcenary property. Nobody can say, this specific piece is mine until the partition happens. They have a right to manage and can even potentially become the Karta. They can question the Karta's decisions if they feel it's not good for the family. They also have the right to maintenance, just like other members. Right to alienation is limited. They usually can't sell or mortgage their share without others agreeing unless it's for a really necessary reason for the family and the Karta agrees. You might have seen this happen in real life. Someone might be a Coparcener in their father's HUF, which gives them rights including partition. But their wife, while member of a father-in-law's HUF because of marriage, might not be a Coparcener there and so wouldn't have the right to partition. However, she still has the right to maintenance. Now, think about this. Someone can actually be a member of more than one HUF. For example, Mr. X is a member and Coparcener in his father's HUF. When he gets married, he can start his own HUF with his wife and kids. Then, his kids, when they get married, could start their own HUF with him and his wife. Who is the Karta? The senior-most member is usually the Karta, the head of the family who manages everything. After the 2005 change, even a senior female member can be the Karta in certain situations. The Karta has pretty wide powers. Let's quickly recap. We have members, broader group, right to maintenance, and coparceners, birthright in property, right to partition, can be Karta. The Karta manages the show. How do you actually start an HUF? It's not just a handshake. To make it official, you need a legal document called an HUF Deed. This deed is like the constitution for your family's collective assets. Here's the general idea of what goes into it. 1. Gather info. Name of the HUF, usually Karta's name plus HUF. Details of the Karta, like name, address, etc. Details of all the coparceners, including daughters after 2005. Details of any other members, like wives. And importantly, the source of the initial capital, where the first assets coming from. This could be ancestral property, a gift, or even a loan. Also, the HUF's address and the date you're forming it. 2. Draft the deed. Write all this down clearly in the HUF deed. Mention the title. Declare that you're forming the HUF. List everyone's details and relationship state the source of the initial money or property. You can even add optional points about how the Karta will operate or how decisions are made. 3. Sign it. The Karta and all the adult Coparceners need to sign it. You also need two witnesses who sign and give their addresses. 4. Stamp it. The deed must be on non-judicial stamp paper of the correct value based on your state's laws. 5. Notarize. Optional but recommended. Getting it notarized isn't legally required to form the HUF, but it adds an extra layer of official proof and the notary checks who's signing. This is something most people get wrong. They think just calling themselves an HUF is enough. You need the deed. Getting the HUF PAN. Once your deed is ready, the next crucial step, especially for taxes, is to get a PAN, a permanent account number, specifically for the HUF. Yes, the HUF gets its own PAN, separate from everyone else's. You'll need documents, mainly proof of identity and address for the Karta, and the most important one, a copy of the HUF Deed, preferably the notarized one, to prove the HUF exists and show the relationship between the Karta and Coparceners. Sometimes, an affidavit from the Karta might also be needed listing the Coparceners. Check the latest official guidelines for the exact list. After getting the HUF PAN, you can even open a bank account in the HUF's name. If the HUF runs a business, it can also get a TAN and a GST number. Let's take a moment here. This is where the HUF starts becoming a real financial entity, independent from the individuals. Funding your HUF, where does the money come from? The initial capital is super important. It's the pool of assets the HUF will own and manage. Where can this come from? Ancestral property, the most common way. Property inherited across generations automatically becomes HUF property. Gifts, family members, like the Karta or Coparceners, can gift movable or immovable property to the HUF. Gifts from defined relatives are generally tax-free for the HUF. But if someone who is not a relative gives a gift, and the total gifts in a year are more than 50,000 rupees, the amount over that limit is taxable for the HUF. Loans. The HUF can take loans from banks or even its own members. Just remember, loans have to be repaid from the HUF's own funds. If you take a bank loan, the HUF property might need to be mortgaged, and the Karta or Coparceners might have to be co-applicants, making them liable if the HUF can't pay the EMI. Business or rental income. If the family owns a business through the HUF, the income adds to the capital. Or if the HUF owns property, the rental income adds up. For example, a family running a medical business could form an HUF to manage it better. Now, think about this. What if a member gives their own personal property to the HUF? This is covered by Section 64 of the Income Tax Act. If a member does this, the income that the HUF earns from that gifted property will be added back or clubbed with the income of the member who gave the gift. So, the gift itself is not taxed for the HUF when it's from a member, but the income from it gets clubbed. But if a non-member gives a gift and it's over 50,000 rupees, the gift amount itself is taxable for the HUF. However, the income the HUF earns from that property is not clubbed with the non-member donor's income. That income is taxed only in the HUF's hands. This is something most people get wrong. What can an HUF do with its money? An HUF with its own funds can buy assets just like an individual. It can buy land, shares, mutual funds. It can even apply for IPOs, initial public offerings. Here's a quick point. While an HUF is a separate entity with its own PAN, it's not considered a real person in the same way. So, an HUF cannot be a partner in a partnership firm or a director in a private limited company. But it can be a shareholder in a company and can make a nominee. If your HUF does any transactions in a year, you must file its income tax return, ITR. Otherwise, you could get notices from the income tax department. HUF and taxes, the details. Okay, let's talk taxes. The income tax slabs for an HUF are the same as for individuals. The HUF is also eligible for deductions under various sections, like Section 80C and Section 80D. Interestingly, if an HUF invests in a member's public provident fund, PPF, the HUF can claim the 80C deduction for that. However, here's something important. The rebate available under Section 87 is not available to HUFs. You might have seen this happen in real life, or perhaps you have income from ancestral property. For someone with multiple income sources or income from ancestral property, forming an HUF can be a strategic tool for tax optimization. Remember the example we saw? Before forming an HUF, one person had a total taxable income, let's say high, and a higher tax payable. After forming an HUF and transferring the ancestral property income to the HUF, that income gets taxed separately in the HUF's hands, potentially at lower rates depending on the total income in each entity, leading to a lower overall family tax burden. Just keep in mind, an HUF generally cannot have salary income, but the standard deduction for income from house property is applicable to an HUF. Here's a quick point. Even non-resident Indians, NRIs, can form HUFs. The tax implications for them would depend on where the HUF is located. What happens when the HUF ends? Partition. An HUF doesn't really dissolve like a company closes down. Instead, it goes through partition or separation. This is where the assets are divided among the members or sold off and the money divided. Why does this happen? Maybe the children want to separate and live independently in harmony, as the example mentions. Now, think about this. This partition process is recognized by income tax law. And here's great news, HUF partition is not a taxable event according to income tax law. The division of assets itself doesn't trigger a tax. Let's quickly recap. HUF is a separate entity. It has members and coparceners with different rights. You need a deed and PAN to form it. Capital comes from ancestral property, gifts, loans, income. There are rules about gifts and clubbing of income. HUFs can buy assets but can't be partners directors. Tax slabs are like individuals, but no Section 87 rebate. Filing ITR is mandatory, and it ends by partition, which isn't taxed. Final thoughts. The HUF structure is a really viable option for managing family wealth and potentially cutting down your overall tax bill. Understanding how it works, how to set it up, and the tax rules is key to making it work for you. But please, it's super important to get professional legal and financial advice. A CA specializing in this can help you set it up right. Make sure you follow all the tax rules and ensure it actually fits with your family's goals. Careful planning is essential to get the most out of an HUF and avoid any headaches. Now you know what most people don't about HUFs. If this was helpful, give it a thumbs up. Share this with someone who needs to know about this. And if it's still confusing, listen to this part again or drop your questions in the comments. See you in the next video.